On behalf of Nomura, I would now like to welcome you all to Just Dial's Q3 FY21 earnings call. We have with us the founder, CEO, and MD, Mr. VSS Mani, and the CFO of the company, Mr. Abhishek Bansal. Without further delay, I would hand over the call to the management. Over to you guys.
Just Dial's earnings call for third quarter of fiscal 21. Operating revenue stood at rupees 169.5 crores for the quarter, which declined 28% year-on-year and grew marginally 1.2% QOQ. This YOY drop primarily reflects the catch-up of accrual revenue with lower collections which we have been witnessing since March 2020 due to COVID-19 impact. However, with lockdown easing, monetization has been on an improving trajectory, and Q3 FY21 collections had a relatively lesser decline at 13.6% year-on-year. Sequentially, Q3 collections grew about 22% quarter-on-quarter, and overall monetization currently stands at approximately 80% of pre-COVID levels, which I think is reasonably healthy considering the severe impact COVID-19 has had on SME community. Operating EBITDA, adjusted for non-cash ESOP expenses, stood at 48.2 crores for the quarter, declining 32% year-on-year, primarily due to lower top line. Adjusted EBITDA margins stood at healthy 28.4% for the quarter. Sequentially, there has been some decline in margins in percentage terms due to 5.2% quarter-on-quarter increase in our employee expenses, which in turn was primarily due to higher headcount. We have now resumed hiring primarily in sales, and sequentially our headcount was up 10%. Other income for the quarter stood at 30.4 crores. Net profit for the quarter stood at 49.9 crores, declining 19.5% year-on-year. Coming to operational highlights, we had curtailed our advertising spends from April 20 to optimize on our discretionary costs in light of COVID-19 impact. Majority of traffic is presently coming organically without any advertising. Organic traffic has recovered well over the past few months, and ad spends are also now resuming gradually. Overall, we had about 132.6 million unique users for the quarter, which was down about 15.6% year-on-year. Once our advertising comes back to pre-COVID levels, we should be higher versus our pre-peak traffic levels of last year. Total active data stands at about 30.2 million listings, and paid campaigns at the end of the quarter stood at about 454,000 campaigns. Coming to cash and equivalent, that stood at approximately 1,510 crores as on December end. On the product side, our new B2B portal JD Mart is being launched as we speak. You shall soon see advertising campaigns around the same. It is great to see efforts of almost 13-14 months fructify into launch of comprehensive user-friendly B2B platform. Endeavor shall be to scale this platform to become India's go-to destination for any business, be it wholesalers, distributors, manufacturers, retailers, over the next few years. Overall, as I see, it is good that traffic has recovered well and monetization is catching up too. In few more months, we should start growing versus pre-COVID levels as well. COVID has helped us bring in a lot of efficiencies in our cost structure, which are healthy for the business in the long run. COVID-19 has definitely accelerated digital adoption among SMEs, which should bode well for our business. With this update, we will open the floor for questions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Rishit Parikh from Nomura. Please go ahead.
Hi, thank you. Just a couple of questions from my side. Given that JD Mart is now live or expected to be live soon, right? Could you provide a little bit more color on the pricing across markets and categories? And also, if you could just provide what services will be built in as a part of the recent product and what are the plans from a next 1 to 2 year perspective on the product or the services, please. And just lastly on that piece, any update on the recent dispute with IndiaMart?
Okay, so firstly on JD Mart, so as you mentioned, on the services part, firstly, I'll take that. So JD Mart will be a platform where all retailers, distributors, or any kind of B2B supplier can list their products. People would be able to search for these particular products, get comprehensive information. As businesses are concerned, they will even be able to avail additional services such as logistics, right from hyper-local to local to national to even international. Apart from that, we are also tying up for additional services such as working capital related funding or insurance related requirements. So essentially the idea would be that this particular platform will enable any B2B seller to become online to avail any services that they require to run their particular business efficiently. As far as pricing is concerned, so there will be multiple packages on offer for our customers. These particular packages will vary depending on the type of category, will vary depending on the type of geography. The core essence shall be that if you take up a subscription on JD Mart, there are certain items that you will get. For example, a comprehensive digital catalog for your business, JD verified or a JD trusted stamp for your business, depending on whether you qualify. Then, apart from that, obviously, you will get a certain assured number of inquiries for the amount that you pay. And in order to give comfort to SMEs, we are planning that whatever amount that SMEs will pay, that will be deducted only against the inquiries that we shall be delivering to them. So in tier 1 cities, packages could start anywhere from say around 25,000 rupees. And as you go higher, the unit price for each inquiry that you receive will be lower. And similarly, pricing would vary across categories, across geographies. Coming to your second question on update on the recent legal dispute. See, as far as legal dispute is concerned, let us first briefly understand what the plaintiff's prayers are. So they have taken an ex parte order where court has mentioned that there should not be any proprietary content of a third party on JD Mart. JD Mart should not have same look and feel as that of plaintiffs, platforms, etc. And we are very clear from day one that we do not intend to infringe on anyone's copyright. There is no restriction on launch of JD Mart, and JD Mart app and website are getting live as we speak. And once these platforms are launched, it will be out there for everyone to see whether there is any similarity with any other portal, be it plaintiffs or any other portal even globally. Our portals were not even launched, so there is no question of any commercial exploitation or any violations. Having said that, the next hearing of court case is on 16th April, and our legal team is taking appropriate actions. At this point, there is a lawsuit which Just Dial has initiated against the same plaintiff since we came across mass infringement of our protected data by them. The next hearing for that case, interim release, is tomorrow. So overall, we are clear that we don't intend to infringe on anyone's content, anyone's copyright, and at the same time, we shall do whatever it takes to protect our content, our interests.
Understood. That makes sense. So just to clarify that we will have a more differentiated pricing across markets and across geographies, and it could differ across categories as well. Is that the case? Or
we shall keep it as simple as possible. There will be an entry level ticket size which will be affordable for all kinds of businesses. B2B is so range. There's a range which you can have vendors who are willing to spend much more than what certain categories can. Certain categories can be very localized, very industrial area specific, and things like that. So what we do is we are assessing the market. Initially, we'll go with one standard offer price and then evolve. But the thing is, like Abhishek said, it will be all comprehensive solution for a vendor. So you will get a digital catalog, even a website or an app and things like that. It's part of the package. You can get everything in under one roof. And that's what we're trying to kind of solve all these problems to reach out to customers.
Okay. Makes sense. I'll come back in the queue later.
Thank you. The next question is from the line of Pranav Kshatriya from Edelweiss. Please go ahead.
Yeah, hi. Thanks for the opportunity. My first question is regarding the traffic. Since you said that you have already started spending on advertisement, So can we expect for the next quarter the traffic to be in line with the previous quarter, or your spending is still curtailed because of the cost-cutting measures, and it might take a little bit of while for traffic to go back to pre-COVID level? So that's my first question.
So Pranav, on advertising, we spent only about 80 lakhs in last quarter, majority of which was spent in December month. So advertising still, as far as spending is concerned, is at much lesser levels versus pre-COVID. However, at this point of time, that decision is not due to any curtailing due to COVID impact, etc. It is more that we were waiting for launch of our upcoming platform, and we wanted to align our advertising campaigns around the same. So as and when the platform gets launched in next couple of days, subsequently we are working on new advertising creatives as well. And over the next couple of months, you shall see advertising campaigns for JD Mart as well as revamped campaigns for Just Style overall as well.
Yeah, the JD digital ad campaign is almost going live. In any case, it's going to be keyword specific. And the non-digital ad campaign, or rather let's say the video format of the ads, you will see two series of ads. One which will promote the JD Mart and JD Mart related product and launch and all that. Soon it will be followed with, once that campaign gets over, then the regular Just Style keyword ads, which are much more funny ads and short and sweet ads. That's what you would see. So in this year, you would in all probability see a Just Style spending. Rather, I'm saying the coming financial year, probably double what we spent in the previous years. So we're going to compensate for what we have not spent in 2020 and double our spend in next financial year.
Okay, so I mean, just to summarize, Q4 will be a sort of transitionary quarter, and Q1 FY22 we will see a much elevated level of spend. That is because the JD Mart digital campaign will go live, as well as JD Mart as well as Just Dial Core digital will go live. Okay. Right. So my second question, you partly answered that, but basically I wanted to understand, how the cost we should look at it. Other than advertising, I do see a healthy addition of employee during the quarter. So is that normalized and you have done a fair bit of hiring, or there can be scale up happening here also?
You will see more hiring on sales. See, there was an obvious reason why we couldn't hire as many people that as we would have preferred, especially for sales and sales related activity. So you will see a lot of hiring as well as appointment of resellers. So you will see both these activities scale up in this quarter. And probably in the next earnings call, we will have a much healthier headcount in terms of sales personnel. Now that the lockdown story is over, all of India is open, the trains have started functioning in Mumbai and everything looking okay. There's no point of us delaying hiring further and strengthening our team. So coming few quarters, you may just look at, we won't bother about, although we have been accused of being a profit-obsessed company, you will see that there will be a change in the characteristics, and we will be more investing into our products and investing a lot more on marketing and advertising.
Thank you. Very helpful. Just one last question on, more of a housekeeping question. We have seen, a very healthy other income, during the year, and that was largely because I think interest rate coming down, and that also benefited on the tax rate also for the year. How should we see this getting into FY22?
The treasury team separately works on these ideas from time to time, depending on what gives us the best yield. So if there has to be a need for intelligently switch from one scheme to the other, in terms of, we only invest on debt funds, by the way. And if there is, we feel there is a view, we of course, when our consultants tell us there is a view that, in the near term, the interest rates will be just climbing up. So we may switch from certain bonds to certain other type of mutual funds which may give a better yield. Debt funds.
Yeah. So definitely we have benefited from lower yields. At this point of time, yields are at whatever 5.5-6% levels, and average maturity of our portfolio is around 3 years or so, which is basically to make them tax efficient. For tax rate, it is pretty straightforward. The core business income attracts almost full tax rate, though there are certain small deductions that it. So around 24% is what we pay there, and other income attracts about 12-13% blended tax rate.
Okay. Thank you so much, sir. That is from my side.
Thank you.
Thank you. The next question is from the line of Vivekanand S. from Ambit. Please go ahead.
Hi. Thanks for the opportunity. I have a couple of questions. One, the headcount ramp-up that we are seeing now, these are mostly addition of sales employees. What kind of specialized talent do you think we will need to hire for the B2B and exports operation? And Mani, I know that you commented that we will get to know this maybe in a quarter's time, but if you can talk about the non-sales headcount that you plan to hire for these new ventures, that would be great. Second question.
Non-sales talent has been hired, in fact, pretty much in all these initiatives, and in fact further getting boosted in terms of product technology and content-related heads. So that's on, and it's already, I would say, quite an extent achieved. Yeah, go ahead with the next question, please.
So next question is on the state of activity as far as the SMEs are concerned. Your commentary seems to indicate that there is reason to be somewhat optimistic of a full-fledged recovery in fourth quarter. How confident are you of coming back to a 10% plus revenue growth on the non-B2B part of the business based on what you are seeing on the ground now?
So obviously, our goal is to first reach the pre-COVID number, which is pre-COVID run rate that we were at, which is a good 30% above what we have achieved so far. Large percentage of our revenues come from services sector, and also most of it's from B2C. So among the worst affected were the B2C and services sector. Now with opening up of the economy and all that, you would see that very fact that they're all being able to do their business on a day-to-day basis properly, it should come back to pre-COVID number. Post that, of course, we have to show that at least by the end of next financial year, same time, we should be growing as compared to what we did in FY20 Jan-Feb, which should be at least a 10-15% growth. Now, all these are in plan, so a lot of things are dependent on the ecosystem. Some of it, like initiatives and efforts from our end. So we have now rolling out one after another the efforts, whether it starts with marketing, hiring people, and whatever it takes to deliver a great product. And hopefully the economy looks good overall. Everything's looking good. Even the budget is looking great. So we are just very optimistic. In the last 4 quarters, we have not been so optimistic as we are now.
Right. And would you like to elaborate on the hiring that you did on the product and tech side? I think I asked my second question before you could complete that.
So what we have done is in all our new initiatives, we have taken key heads to run the business, the product, or we have groomed some of the existing talent pools to focus only on a certain specific product. For example, B2B. Then B2B, within B2B, there is content enrichment team. Within B2B, there is a team that works on certain aspects to do with the keywords, the whole taxonomy that goes with it, all those things. So there is a lot of resources that are required. So there are clear-cut owners for these resources.
Okay. All right. Thanks. All the best.
Yeah. Thank you.
Thank you. The next question is from the line of Aaron Armstrong from Ashmore. Please go ahead.
Hi there. Thanks for taking the question. First question would be around JD Mart, please. Would you be able to give any update in terms of adoption rates, perhaps the level of existing Just Dial customers that have onboarded with JD Mart and have their product catalog set up? Any kind of numbers you can give us a feel for, please?
So on JD Mart, as far as the user traffic, etc. is concerned, we'll be able to ascertain once the platforms become live. On the content side, we have about 6.5 million listings out of the total 30 million listings that Justdial has. These 6 million into B2B. Within these 6 million listings, our endeavor is to get very rich catalogs for approximately 1 million businesses. So at this point of time, we are at about 250 to 300,000 of them, and we are augmenting those on a day-to-day basis. So those efforts are on, and once funds get launched this particular week, then gradually traffic shall also start scaling up.
That's great, thank you. And do you have ambitions over the medium term for the extent you'd like to monetize that base of 250 to 300,000 with the catalog listings? How many of those you'd like to convert onto paying plans?
Our key interest is right now to have every B2B vendor out there to participate in this marketplace. We thought even it's worth giving a good 60-day trial period for them to come on board and show them the kind of catalogs they can have, the kind of leads that they could see. Of course, to grab the leads, they have to pay to come into the paying ecosystem. So you can say more like a Salesforce.com kind of an approach, like set it up for them and then let them kind of have a feel about it and then start paying it. So in the very short term, you cannot expect too many conversions, but in like 6 months to 1 year's time frame, you will have some significant number of paying B2B vendors. And whatever B2B vendors are paying competition today, about 80% of them do not pay us a single penny today, as of today. So we intend to convert all the low-hanging fruits, and because they have converted souls, so that's where we would probably target. And there are large, medium-sized corporates that are also trying to reach out to consumers directly or via distributors and all that. So between the combination of the two, we should be able to do decent revenue by the completion of 12 months. The first 3 months, I would say our obsession would be to create as many catalogs, create awareness to have a right to create a free catalog of their own.
That's great, thank you. And then the final 2 questions from me. One would be in terms of any cost savings. So you've had a chance to assess everything that's gone on with the pandemic, things like working from home, reassess headcount, any kind of longer term cost savings or cost inflation on the other side. And then final question for me would be any update on the JD Experts project, please?
JD Experts, you have to wait for the next quarter. We didn't want to really launch a couple of products at the same time, but that's on cards. The work is in progress. Regarding the pandemic, of course, we learned a lot that there's a lot of stuff which could be done working from home, working from anywhere. That gives us access to a certain different quality of resource, actually, which is quite unused in homes and so middle-class homes in India. So we are quite excited that once this opening up happens, that we are looking at those talents and we don't want them to ever come to work. We want them to work from wherever they are and deliver, and that could be a nice combination of fixed and variable model. So this is actually a big discovery thanks to this work from home culture. As far as overheads and other things are concerned, Abhishek should be able to tell you better. Generally rental overheads and those kind of stuff we spend only 5-6%, I guess. Abhishek, you should be able to tell me.
Yes. So as far as our other expenses, excluding advertising, are concerned, they are almost down about 15% versus pre-COVID levels. So, for example, we have been able to optimize on our rental expenses, and there are certain expenses obviously linked to those, such as power and fuel, etc. Then we are working to optimize on our tech and IT-related spends as well. Nevertheless, the majority of the operating expense is in employee costs. So these other expenses, to the extent possible, they have been quite optimized, and it is a recurring sort of activity.
Thank you. And that 15% saving that you mentioned, is that short term, or do you see that sustaining over the coming quarters or years?
We do see that to be sustaining for good long term, because those are whatever say optimization that we could do on rentals, they seem to be permanent in nature as of now.
That's great. Thanks very much.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Abhilash Sitale from Dalal & Broacha. Please go ahead.
Yeah. Thank you for taking my question. So my question is, overall, if we see the economy has revived in Q3, like most of the sectors in economy have revived, spending has revived. However, like our traffic growth has been lackluster, commensurate to the what recovery we have seen in the economy. So is it mainly because of our advertising spend has been lackluster, or is there anything else which has contributed to this? And in Q4, do we expect that this 230 to 40 crores of quarterly run rate to get achieved as our advertising spend comes back to the normal level?
See, on the traffic, historically, if you would have seen, Q3 typically tends to be a slightly softer quarter because there tends to be a couple of festivals, then the year-end activities. And during that particular period, overall, the online traffic for a commercial intent search-oriented platform such as ours tends to be somewhat affected. Having said that, organic traffic at this point of time is already at a higher level versus pre-COVID levels by almost 8-10% or so. So as and when we resume our digital advertising, this particular traffic should be say around 20-25% higher versus the reporting number that you see at this point of time.
Okay. Yeah, sure. And how has been our churn rate in the quarter? Are we seeing, quarter-on-quarter improvement in that? And as our advertising spend improves, then the active paid customer base to increase commensurate to that because the churn rate will also come down.
So churn rate, we typically do not look at it on a specific quarter-to-quarter basis. But yes, overall in last 3 quarters, churn was to an extent higher versus the historical average, simply because due to COVID, a certain set of customers would have delayed their decision to renew their campaigns. However, now, as I mentioned in my opening remarks, that we are almost at 80% of pre-COVID levels. Now, gradually, some of those particular customers are definitely coming back. And in, say, a few months, as and when we reach those pre-COVID levels, our churn rates or retention rates should be back in line with whatever our historical trends have been.
Okay. And the last one, say on JD Mart, we will be launching, a couple of days, as you said. So as we are, talking about the launching of JD Mart and monetizing, and first 3 months will be stabilization period, and we afterwards, we will start monetizing. So what are our internal targets to reach, say, over next 12 months or 24 months, and even long term, say 3 to 4 years? So how are we seeing this model stabilizing in the short term as well as in the long term?
See, JD Mart is solving a problem. So there is a whole lot of B2B vendors who are looking at a more effective, modern way of promoting their products and distributing their products. And JD Mart is solving that problem, which also going to the next level of not only creating digital catalog and putting their products in the marketplace, but also helping them with a state-of-art website, even if required an app, and then the complete digital solution. It's like a complete core digital solution that we are giving it to them. So you would see that as the product progresses and we are able to cater to a particular need of businesses, the adoption rate should be much higher. And there should be decent commercial gain for us, in terms of revenue. Currently, we make just about 200 crores revenue from B2B section. I mean, I'm talking about the pre-COVID level. We were making about 200 crores of revenue. Let's say that as a base. That base should substantially grow from what it is, because at that time we didn't even have a product. There's no marketplace at all in that sense. So with this kind of a product and marketplace available, the number of vendors participating as well as the value that is spent with us will be substantially higher.
Okay. But do we have any number in our mind, like, we want to reach, say, double the revenue over next 12 to 18 months or 24 months? Anything specific?
One step at a time. I mean, what looks like, when you look at overall opportunity is so huge, and what we are achieving right now is so low. I think any number we put, we can go wrong both ways. So it's better to execute, stay focused. Doubling the revenue, is it possible? Yes, why not? I mean, without a product, we are able to do 200 crores of revenue. Then, with a decent product, why not double the revenues? But can we do it? Well, that's a lot of execution questions there. Whether you'll be able to do it or not. So one thing at a time. First, deliver a good product, and then get the people on board. Let every B2B vendor be aware of this product called JD Mart. And obviously, the traffic, once that comes through Just Dial and through other methods, organic and inorganic, you will see this will definitely be one of the best launches from Just Dial ever.
And as you are launching, what are the biggest challenges in your front? Is it, the competitive intensity or the user base itself, because MSMEs are, less aware or with the technology? And so what do you feel are the biggest challenges of not achieving the goal, what you are targeting?
The market opportunity is so big that there is no question of competition taking away and all those things. Everybody can thrive if you do deliver a great product. Eventually, it's all about, are you able to deliver value to them? Are you able to deliver quality leads? Are you able to deliver transactions to them? And that's where we are working on those directions. There's a lot of gaps in the market, which we can fill it up. And there is also this whole opportunity that opened up because thanks to the new awakened business community, which is thinking like digital should be the key digital first strategy for their business. So I think the timing is perfect this time. So I feel that there is no issue about any such challenges. The challenges, like any other business, is on those minutest details that you have to do and get into execution process. That's what is, I would call it as a challenge.
Okay. And this is the last one. Do we have, traffic share like in our B2B segment? Like, have we worked out that number or any,
Next quarter onwards, we should be able to give you that data breakup. And Abhishek, if you have any, you can share right now.
No, so so far we do not segregate traffic between B2C versus B2B, etc. So once JD Mart gets launched and we see traffic evolving on that, at that point of time, it would be more relevant to discuss that. In any case, overall, we have always mentioned that B2B typically contributes about 20% to our business, be it in terms of revenue contribution or even in terms of volume contribution.
No, I meant market share, traffic market share in terms of our B2B segment.
Most likely going to be 20%. We can only pick a number and tell you right now from the thin air. We would rather give you a breakup in the next quarter. So you are saying market share. It's a very hard thing to talk about because when you don't have a marketplace in the first place, how do you arrive at a market share? So once you have the product, then 6-8 months down the line, you should be able to compare market share in terms of traffic or monetization.
Yeah, sure. Thank you. Thanks.
Thank you. The next question is from the line of Manik Taneja from JM Financial. Please go ahead.
Hi, thank you for the opportunity. Just wanted to get some clarification around the advertising spending that you are suggesting that you will be stepping that up. So should we see, even if I will practically spend nothing this year, should we see the spending being significantly higher than the close to about 60 crores that we spend annually? That's the number that we spent over the last few years. Should we see a material increase there?
Yes, as I said, since we didn't spend significant amount of money in 2020, FY21, so this FY22, you will see that we are going to spend substantial amount of money in terms of advertising and marketing, and we have enough reasons to do so also. So 60 crores, we could probably be spending double the amount.
Sure. Thank you and all the best.
Yeah.
Thank you. The next question is from the line of Rishit Parikh from Nomura. Please go ahead.
Hi, thank you. Just wanted to understand what is the sales strategy essentially, or you talked about some of the low-hanging fruits, right? How do we essentially plan to sell? What are the key low-hanging areas that we could sort of convert in the next, let's say, maybe 2 to 3 quarters, 2 to 4 quarters? And from the current, let's say, paid listing number of, let's say, 90,000 to 1 lakh, right? What are we looking to achieve from the next, let's say, 2-year perspective, 2-3-year perspective? Any color or any projections or internal strategy that you've been talking about would be helpful there. Thank you.
See, on the targeted customers, obviously, when we say low-hanging fruit, it means ones that are converted, ones which are already doing some effort on digital media are the first ones to reach out to and create a comprehensive digital catalog for them. Secondly, since we have been in this business for 25 years, we exactly know which are the popular businesses in the very same P2B space, in each category. So we know these popular businesses creating their catalog and converting them into the paid ecosystem, which means we have far better quality, verified, trusted vendors, and it's a win-win for all, including the users as well as the vendors and Just Start. So that's going to be our target area. So hypothetically, let's say there are 10 million businesses to go after. Maybe the first 200,000 could be our super important, businesses to reach out to. And next we go to the next level, 200,000. So that's how we're going to follow. It's not just about reaching out to these businesses. It's about capturing every minutest detail about the products, in every possible way, as rich content as possible, photos, videos, minimum order quantities, price, the works. So there's so much to do in this.
No. So essentially the question was, so while you've already created a large catalog, right?
Yeah.
So that the catalog is available. Now the question essentially is how we convert them to sales. So what will be the key selling point that, let's say, when Just Dial sales?
No, like Abhishek said, like there is whatever investments they do, those money is kind of with some kind of an assured kind of leads and they get. So that itself is good enough because Just Dial has been around for 25 years or more, and then we give a new product. Anywhere they could hesitate is about investing that kind of money. But when you are assured that you will be value, till that value is delivered, your campaign doesn't go for expiry, So those are good enough hooks to get these people to come into the paid ecosystem. Most importantly, they are already willing to spend that kind of money because that's the bare minimum they do to grow their business. They have a budget, so we just have to make sense to them. Hey, this is like a very safe investment, and there is a bang for the buck here, and probably much better than the other mediums that you have.
Okay. Fair enough.
Thank you. The next question is from the line of Pranav Kshatriya from Edelweiss. Please go ahead.
Yeah, hi. Thank you for taking my question again. Abhishek, can you just, tell us, how the collection run rate has been, for the exit month or even for the month of January, if the number is available?
So I think best is to look at it on a quarterly basis. So 80-82% is the run rate that we have recently seen.
I mean, sorry to probe into a bit because if I look at collection for this quarter is down only 13% YOY. So when you say 80-82%...
So yes, so 13.6% is YOY decline. When we try to benchmark internally with pre-COVID levels, we typically try to see what is the average level for the year. So for example, last full year, if I see, our average was around, say, 80 crores a month. And so at recently, we are at approximately about 65 crores a month.
Okay. And so if I look at even from the trajectory, I mean, Q1 was 50% down, Q2 was like 30% down, then now 15% down. So I guess, by that, trajectory itself, Q4 should be flattish to possibly increasing. Given how things are panning out, you think there could be a different shape?
No, it should be better because as far as collections are concerned, March, which typically tends to be a relatively stronger month for us. Last year, March 20 was severely impacted due to COVID. February month also our collections were to some extent impacted because we had aggressively adopted monthly plan strategy. So just on a optical YOY perspective, yes, this particular quarter should be much better. However, instead of benchmarking just to say March quarter last year, our benchmark would be to say 80 crore per month kind of run rate. How soon can we achieve that?
Okay. Thank you so much.
Thank you. The next question is from the line of Lavanya Totala from UBS. Please go ahead. Ms. Lavanya Totala, you may go ahead with the question.
Thanks for the opportunity. My question was answered. Thank you.
Thank you. The next question is from the line of Vivekanand S. from Ambit. Please go ahead.
Yeah, thank you for the follow-up opportunity. Can you please talk about the traffic mix, tier 1 versus tier 2? And would it be possible for you to update us on the listings, paid listings mix and also the revenue mix?
So as far as the traffic mix is concerned, traffic mix is almost about 50-50 now. 50% of the traffic comes from tier 1 cities and rest about 52% from tier 2, tier 3 cities. As far as revenue contribution is concerned, tier 2, tier 3 cities contribute about 32% to our revenues. And as far as their contribution to paid campaigns is concerned, they contribute about 55%.
Okay. And can you talk about the mix of your packages now? Because I remember that just when we were heading into COVID, you pivoted towards a monthly package strategy. And now when we are seeing your collections improve and inch back to the pre-COVID level, we are seeing that your deferred revenue is building up faster than your revenue recognition. So it seems as though you are onboarding more longer duration packages. Is that the case right now? And is that also a reflection of the nature of your packages, like more premium packages returning first before the non-premium ones? Any color on this?
So as far as monthly subscription versus upfront payment plans are concerned, post-COVID struck, definitely our teams have focused more on upfront payment plans because in order to do documentation for monthly payment plans, the accessibility was not that great. Though there is a digital option as well to sign up monthly plan contracts, however, with the SPs at times that does not work that efficiently with all of them. Having said that, historically we have been at about 30% monthly plan campaigns, and during our best years we used to have it at a much higher rate, even over 50%. Last 3 quarters we have been almost at about 25% range or so, but recently we are already, for the January month, we were at about 35-36%, and we are taking that monthly plan contribution up. The reason of taking that up is simply that if we can increase affordability for SMEs, there tends to be higher participation by SMEs in this particular paid campaign.
Right. And Abhishek, can you comment a bit on the premium versus non-premium packages? Where did you see the paid campaigns come back? Or was it the case that in the premium packages you practically didn't see much churn?
No, so premium packages typically tend to be higher ticket size packages. So to some extent they get affected because the flow from that SME is on a higher side. So the impact was on both buckets, and now recovery also is in both buckets. Going forward, we are encouraging more of non-premium packages itself. So the idea is get as many people in non-premium packages as possible, and whoever have high affordability, pitch them premium packages, which anyway offer disproportionate value for money.
Right. And when do you see your campaign count going back to the pre-COVID 540K per quarter kind of levels?
So overall, if you see that for these 9 months, our revenues are down about 30% year on year, which essentially coincides with collection trends for last 3 to 4 quarters or 10, 11 months. Now this 30% drop, broadly, half of the drop has come due to campaign drop and half due to realization. Both the parameters are approximately down 15% year on year. And the realization that you see today is not really the realization at which I am taking up new customers today. It is simply the realization that you are calculating via accrued revenue. So the realization in my newer collections that I'm doing is already much better. So as and when our collections go back to pre-COVID levels, both campaigns should also sequentially improve, and you will see realization coming back as well.
Right. So you're saying that as your monthly plan contribution moves up even further, your ability to price the campaigns, reflective of the economic value improves. Is that a proper assessment? Because I'm sure during the peak of the COVID period, you would have done quite a few campaigns at very lucrative rates to draw the SMEs, right?
Right. So whenever you are selling on a monthly plan basis, it is easier to have a better monthly realization. So you might be selling it on an upfront basis at say 2,000 rupees, but when you sell monthly, you can easily convince the customer to pay 2,000 rupees a month. So to that extent, the higher contribution of monthly contract does help with average realizations as well.
During the COVID time, there was generally a weak response from the vendor community. So they were lured into spending small ticket items. Usually we try to sell a robust package, which was slightly discouraged. Both from the salesperson also didn't have the confidence and courage to really push it because there's so much of uncertainty. At the same time, the vendors are willing to probably put some money instead of not putting any money, but in normal scenario, they would have spent probably 50-60% more than what they spent with us, or even much more than that. So as things come back to normal, I think the ticket size should also improve. The duration for which they want to take, more like perpetual contracts or annual payment contracts, depending on the type of customers, we would see all of this happening. So as you can see, 30% drop in revenue has come from both somewhere in the new sign-ups, ticket size have gone down. Some of those old renewals were not renewed on time because of the condition. Now we're seeing some kind of a revival there.
Right. Mani, last question from my side is on the thought process with respect to utilization of cash. We are seeing that two of your listed peers, they are raising capital to acquire assets. And you've been saying in the past that you've been very open to acquisitions, but haven't found anything that really fits to your business model. Do you think that the environment is now right for deploying money in acquiring assets that can make Just much, much stronger?
So it's not that we have not looked at it. In the last 18 months, there have been several offers that have come to us. But when we deep dive into those opportunities, they didn't seem like, first of all, it was the culture itself was so different. Some technology companies also we gave it a pass because they were still not yet there. Some of those companies were having very, very meager revenues, a lot of high spend, high burn rate. We really didn't want to get into it just for the sake of acquisitions. Secondly, acquisitions can happen more with if you have currency in terms of market cap. That gives you far better strength than just in the internet era, just having 1,500 crores in your bank is nothing. And that also after buyback. Just we recently did a buyback probably spent 270 crores odd in payout to shareholders. So it's just that the nature of business is such that you're able to generate cash, but you have to also be very careful. When you actually need it to grow your business, at that time you may run out of it. So we are right now going to spend a lot more than ever before, like I said, both on product and advertising, which will be atypical hairstyle, historically speaking, what we have done, and now you see a new avatar of ours. And so let's see how it goes. So once we get stronger currency in terms of market cap and other stuff, we can look at some slightly far more aggressive moves, a part cash, part stock kind of acquisitions. So there too, we are kind of looking at companies that have either superior technology or revenue, which could help us, or revenue market share, stuff like that. It is very, very, very few.
Right. Thank you, Mani. That was a great detailed explanation.
Thank you. The next question is from the line of Manish Parekh, who's an individual investor. Please go ahead.
My question is answered. It was mostly on utilization of cash. Thank you.
Thank you. We move to the next question. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Vinay Jain, who's an individual investor. Please go ahead.
Thank you. My question is regarding JD Mart. Last interaction you told that it will likely to be launched in December, but I see it is not launched yet. So when it is likely to be launched, and what was the reason of the delay? Was it the legal challenge posed by India Mart or some technical issues? Can you?
It was due to the legal challenge. It was delayed, and rightfully so. Also, if somebody has a claim on something to do with copyright and all, it was first important for us to address. And whatever issues were there, those were addressed. Plus, there was this legal issue. But over and above that, December to Jan, there's not much of a difference. As we speak, the product is live actually. JDMart.com is live, and tonight you will see the apps, both Android and iOS version, going live. But let me pre-warn you, this is a pre-beta version, so don't judge us by this. But definitely the team has done a pretty decent job. In terms of content, comprehensiveness and other stuff, you will get there. Although for a common person, it may seem like a very comprehensive site. For the person like me, would still want so much more to be done. Yes, a few months here and there it happened because of certain disturbances. But having said that, now we are looking ahead in making this a big success.
So can you confirm there is no stay as such on JD Mart itself?
Not at all. How can there be any stay on our business? First of all, we are not commercially anybody claiming anything. We are not yet taken the product live or any such thing. And plus, see, it is, of course, okay, by the way, I just announced that we have gone live with JD Mart. I hope you heard that.
Yes, I have heard that, but is it live for only beta testing kind of thing, or it is a commercial?
You could access it. So on your mobile device, if you access jdmart.com, you will be able to search products, search vendors, everything you'll be able to do.
Okay, fine. Sorry, now it is like...
Also, you will be able to download our app by tonight, hopefully on Android, and by another couple of days on iOS platform.
Okay. So from next, maybe next couple of days, you will start getting commercial revenue from this venture.
Yeah, I mean, we wish to do that. Our entire rollout plan is first launch the product, then reach out to businesses which could participate with the best of the content, validate the content, and some content is already validated, hundreds of thousands have been validated, but still some more to be done. And obviously, vendors won't advertise till you launch the product. So everything has to go sequentially, it will happen.
So when we can see you last time you said that you have budgeted 80 to 100 crore for advertisement for JD Mart.
Yes.
So when we can see your advertisement live on?
You will see it soon, probably within a month. within few weeks you will start seeing it.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management team for closing comments.
So thank you everyone for joining us. In case you have any further queries, please do reach out. We would do our best to address. That's it from our side. Thank you all.